Listen here, folks. I'm happy to finally talk about some good news, right? We've seen a bunch of stocks obliterated in after-hours trading. Finally, we can talk about some positivity here with Chipotle. Chipotle! Look, I'm working on it. It's not an impression that's in the bag yet, but you all know it. You all know the video. You know it. You know that kid. Not in the bag yet. Uh-oh. Right as I speak, guess what? Look, stock just reported earnings. Positive for now. Trading upward. Nothing crazy. Did spike a little bit right after they reported it. And kind of neutralizing just a wee bit now. So let's look at these earnings. There's a lot of good things to think about with Chipotle for this quarter. One thing you need to consider with all fast food chains is going to be the impact of inflation. Now these people are charging more for their menu items thanks to inflation. Charging more for them. So they're getting, let's be clear, their profit margin is not changing. Their profit margin is improving. The cost to make, it's not increasing. It's not. Profit margin boost, menu item price boom. It's great for them. It's great for them. So I would expect to see that be the case here. Let's take a look here. Wow, non-GAAP EPS line of $7.02 beats by 69 cents. I wouldn't have it beaten any other way. GAAP EPS of $7.18 beats by 80. Very nice. Very nice profitability beat. Revenue, what a nice zinger of a quarter. 21.9% year-over-year growth, $1.95 billion. It's a beat by $10 million. Not a massive beat, but it's great to see a nice year-over-year improvement by that aspect, and I think a lot of that comes with it. Again, I talk about inflation there, but I think also there's an improvement in terms of your overall menu price too. So they're just gaining profit that way. Comparable restaurant sales increased 15.1%, while digital sales grew 8.6%, which is pretty significant for them. And again, that's just people placing orders in the app, which isn't crazy, but 42.8% of sales is really nice for them. I mean, you want people to use the app, and obviously there's different avenues for making revenue in that aspect when you're on the app. And we're talking about potential advertising revenue. Could be really nice, and potentially just get repeat customers. It's pretty nice. Operating margin came in at 12.3%, an increase from 6.7%. Again, that's what I'm talking about. Operating margin will increase. Restaurant level operating margin was 23.5%, an increase 400 basis points. What can I say? As far as the outlook, fourth quarter comp restaurant sales expected in the low to mid single digits, at or slightly above 200 new restaurant openings. That's a significant amount of new Chipotles. An estimated underlying effective fourth quarter tax rate between 25 and 27. Not bad. Let's look at the press release. Look at anything else significant if we can, and I love to look at it. They opened 41 restaurants this quarter alone. Pretty nice to see that. Yeah, I like to see it. Look, we don't care about that nonsense. Get out of here. Let's see. Food, beverage, and packaging costs in the third quarter were 30.3% of revenue, which is a decrease of 200 basis points compared to the third quarter last year, primarily due to leverage from menu price increases. Exactly. Partially offset by higher costs, most notably beef and freight. Look, they're taking it on to the consumer. Look, you got to understand here. This is how it goes. You tax the business more, they charge you more. Look, you don't understand. This is what people don't understand about taxes. They don't understand it. They don't understand anything. Higher cost means they're just going to charge more. It's just how it is. Look, the business is meant to make profit, and that's the entire focus of it. Why would you ever start a business if you don't want to make profit? I want to make profit. I don't want to run a net neutral business. I mean, what am I doing there? I'm not making anything out of being an entrepreneur then. I'm not. So their main thing is going to be making profit. So as costs increase, look, your cost will increase as well. As wages increase, your cost will increase as well. Just accept it. It's a thing of life right now. Wageflation, baby. General and administrative expenses for the third quarter were $146 million on a GAAP basis. Not too bad. Not too bad. Yeah, not too bad. Outlook, we saw that. So all things considered, I like to see it. They give you definitions. Wow. Digital sales refers to they represent food and beverage revenue generated through the Chipotle website, Chipotle app, or third-party delivery aggregators. Digital sales exclude revenue deferrals associated with Chipotle rewards. Okay, that's cool, as I said. But in case you were curious, it's good that they actually define that in that aspect. So this is overall, look at this. Food and beverage revenue up, 90, well, we accounted for 99% obviously of sales of income, which makes sense. Delivery service revenue 1%, tiny measly nonsense. But you see the increase here, pretty massive increase, 1.9 billion here compared to 1.6 billion, pretty big increase there. As far as operating costs, food, beverage, and packaging saw an increase. Labor increase. Not a shocker. They weren't running in store last year. So now that they're obviously having more people in there, and obviously they're paying people more. So pretty nice to see. Otherwise, costs all increased, but revenue did at the same point. So nothing crazy in that aspect. Yeah, nothing bad at all. Nothing bad at all. Let's look at the balance sheet. Total current assets here at $1.5 billion compared to $1.4 billion of 9 months ago. 9 months comparison. Just a slight increase in the cash position. That's really it. Total assets sitting at $6.6 billion compared to $5.9. A little bit of an increase here in the operating lease assets, as well as the leasehold improvements, property and equipment category. Total current liabilities at $850.9 million compared to $822. So slight increase there, but nothing crazy. They increased current assets by more. Total liabilities in general, 4.3 to 3.9. They grew assets by more than that, so nothing shocking there by all means. Total stockholder equity improved to $2.3 billion compared to $2 billion. It's pretty nice. Now you look at the stock. Again, consider this as a stock last year revenued $5.5 billion. This year, or 2019, revenued $5.5 billion. Sorry, that's just an utter mistake. Going to be revenuing right around $8 billion this year. Trading at a market cap of $51 billion. Not incredibly expensive. We're talking about really right around 6 or 7 times that value. Not crazy. And a P/E ratio very high at 90 at the current moment. And the stock's actually down after hours now. Look, I've cursed it. I've cursed it, folks. I've cursed it. I think the stock for a fast food chain is trading relatively high. I get that it's a very nice place to eat. I mean, they got some good stuff, but I think it's trading high in terms of valuation for other fast food chains. I mean, you look compared to the median of the segment, they're trading pretty expensive. So, I'm not a buyer in Chipotle at these levels. I mean, we're talking about great improvement, 41% already growth in the last year, and 400% growth in the last 5 years. I'm not a buyer at these levels of Chipotle. I just don't think it's quite at a fair valuation right now. I think it's a little expensive for the business itself, but I hope you have a great day still.